My name's Greg Medcraft. I'm Director of the OECD. I'm responsible for finance and enterprise affairs. I've been there a year. Prior to that, I was the Chairman of the Australian Securities Commission and also the Chairman of IOSCO, which is an international organisation of securities commissions. And before that, I was an investment banker on Wall Street for 30 years, so I've gone on both sides of the street. So one of the things at the OECD that I'm responsible for is blockchain policy. We've just set up a blockchain policy centre, so it's an area of interest to us. On the issue here of decentralisation in finance happening, I think, well, it started, if you think about really before blockchain, is platforms of things like P2P lending, okay? And I think blockchain has somewhat accelerated it, frankly. At the OECD, we acknowledge the trend, and really what we're aiming to do is to help governments respond to the opportunities and challenges. And to that end, in September we had a blockchain policy forum, and we had something like 1,200 attendees from 60 countries, from both industry and policymakers. And we had, interestingly, 25,000 people online, so there's a lot of interest in this area. But our priority is to cut through the hype and to make a sober assessment of really what the opportunities and challenges are. So we have actually done a series of reports on blockchain ICOs, which we released last week, looking at blockchain in equity markets, looking at it in transport, really just examining it in a number of different areas. So, based on our reports and analysis to date, we've seen a technology that I think is very much in its infancy. There's plenty of use cases and pilots, but there's very few, if any, commercially scaled solutions. And I'll probably make just two brief points. One, blockchain and DLT are responding to an enabling demand for decentralization. They're not driving it. There's a demand. This is demand driven, okay? So businesses and consumers want more efficient ways of doing things, and often that comes also from a deficiency in trust in the financial system's intermediaries. That's the first point. The second point is that the totally decentralized, controlled by everyone and no one blockchain networks, which have sort of come to dominate the debate, like Bitcoin and other cryptocurrencies, are probably not where the future of blockchain lies at all. That's my view, and I've been looking at this for a number of years now, both as a market regulator and now at the OECD. And I think after all, you think about Bitcoin and others, other cryptocurrencies that don't have anything behind them other than user demand. I think largely today what they're largely based on is expectations of future value. And put it another way, just mere speculation. So when it comes to cryptocurrencies, the one thing I think that is very interesting is the prospect of central bank digital currencies. I think they offer many benefits, and I think they will appeal to much more mainstream use without their downsides. Another sort of, if you want, derivative of that, I think stablecoin, basically tokenized fiat currencies, I think is an interesting phenomenon if they're properly structured. But I must say, I do agree with Professor Roubini that, I do see it, that, central bank digital currencies, it's really just frankly a matter of time. It's something central banks have been looking at for a number of years, 5 years, and I know from my time co-chairing CPMI OSCO, which is central bank payment systems and market regulators, it's not something new for them in terms of looking at it. But that doesn't mean that blockchain has no place in the financial sector. Blockchain, can be instant, it can be programmable, and it can be predictable. And I see a lot of potential efficiency gains. But I think it's still, I think it's one of its benefits is that it is really a good way to govern interactions between parties, such as competitors or where they don't perfectly trust one another. But what that means is that it's all about the governance of blockchain and DLT networks, which I think becomes sort of, if you're going to have trust, you've actually got to have good governance, and that's really central importance. So blockchains in finance are going to be more centralized than basically big, slow, open networks which rely on mechanisms to sort of between anonymous parties. I think what we need to do is start paying attention as to who owns and controls the networks and what decision-making protocols are and whether they actually do what they claim, because I think there's actually a lot of gaps on that, frankly. But at the end of the day, blockchain may well be a glorified spreadsheet, as Professor Roubini stated in his article. And actually, yes, but I don't think. But is that I don't think that's. I'm actually praising you, Nouriel.
Yeah. Yeah, I know.
But that's not a bad thing, okay? Because in our data-driven digital economies, most of the economic value will come in some form of glorified spreadsheets of some kind or another. So, but we think about it might be a spreadsheet, but or you might describe that, but it's got pretty good enhancements when you think about basically the big thing for the spreadsheet often is the fact you can't trace what changes have occurred in it. With basically blockchain, basically you can actually follow the changes that have occurred in it. Secondly, we know that with the encryption, it's trusted, it's a trusted spreadsheet. So, I think the two arguments there are reconcilable, frankly. And as we know, it just has potential to be such a powerful tool. And I think we've just got to make sure that we remain realistic about what it can or it might do, okay? So, I think it still has, as many people say, I think we're very much in a journey. People would not be spending billions of dollars developing new blockchain business models, and I can tell you if there wasn't something there in terms of efficiency. So, I think it's going to evolve. I think the next 2 years, we are going to see probably an evolution of more scaled uses like the Australian Stock Exchange clearing and settlement system, but it's just going to take time.
I'm Lawrence White from George Mason University. The question our panel is supposed to address is decentralized currency and financial system viable? And I may be the only one here, but my answer is yes. I think we got plenty of historical evidence on that. I mentioned last night that my research prior to the invention of Bitcoin was on private decentralized currency systems in an era before there were central banks. And these systems were competitive and they were stable in countries that had just a minimum of legal restrictions on them. So in particular, I studied the system in Scotland. Other people have studied Canada, Sweden, a number of other places, Switzerland, that had very successful what were called free banking systems. So we can have a decentralized system. There was a common monetary standard, but it was not issued by any one party, right? The production of gold is distributed around the world. No one party controls it. So that makes it a decentralized system. And then the banking systems on top of that were decentralized. Commercial banks issued their own claims to gold in the form of banknotes. It developed into a very sophisticated system. Wiring money began under the gold standard. In fact, it was the killer application of the telegraph to move claims to gold instantly from city to city. So there's no sort of technological barrier presented by the monetary standard being a commodity rather than being a fiat unit or being a cryptocurrency. So I naturally took great interest in the development of cryptocurrencies because here's an apolitical monetary unit, again, coming on the scene, and the question is, will it attract users? And it's a very difficult thing to launch a new currency and attract a critical mass of users because there's a massive network effect in everybody being on the same monetary standard. And that's why it became a worldwide gold standard, because it paid more and more countries to join in. So it's going to be very difficult to shift to one world monetary standard from where we are today. There are, in a sense, too many competitors to be the new standard. No one of them is, Bitcoin, of course, is ahead in the cryptocurrency space, but compared to fiat currencies at its peak, it at one point reached number 6 among world currencies, but of course it's much lower now. So because of the incumbency advantage of existing fiat money units, I don't think we're going to move to a decentralized system unless the public demands it, unless there's a political demand for it. And if we look at where countries have changed their monetary standard without the government sanctioning it, it's in cases where there's a hyperinflation. People will dollarize themselves. But it takes a very high inflation rate for people to make it worthwhile to be an early adopter when you want to use the money that everybody else is using. So absent some kind of hyperinflationary or at least chronically high inflationary crisis among the fiat currencies, I don't see spontaneous adoption, but in a sense that's a good thing. So as long as central banks control themselves, they can maintain their market share. But I think it's important to maintain openness to competition among currencies. So in any country, not only should you be allowed to use the government's currency, but the currency of any other government around the world. You should be free to use gold-backed currency. You should be free to use cryptocurrency, and let the superior system win. If there are other features besides having commonness, having a critical mass, that are more important to people, for example, privacy, then let them express that preference in the market. And I think generally in the debate over cryptocurrency, there's kind of been two extremes. There's been the famous phrase attributed to Paul Krugman, Bitcoin is evil. And the phrase associated with Professor Roubini, Bitcoin is a mother of all scams. I think that's a little too negative. I think some of you may agree that it's a little too negative. On the other hand, I have my friends on Twitter who are Bitcoin maximalists, whose motto is Bitcoin is flawless, and even its mechanism for correcting its flaws is flawless. It's so flawless. Well, I think actually the altcoins or the newer second generation, third generation cryptocurrencies actually do offer improvements on the protocol, but they're at a disadvantage because Bitcoin has a much larger mass of users right now. So I think we need, the truth is somewhere in between those two extremes. The truth is we don't know what the best money going forward is going to be unless we conduct the experiment and let there be competition among various models and let people sort themselves out. I don't think we're in danger of sort of tipping erratically from currency to currency because there is this important network property of being on the same monetary standard. But central banks should face competition they have to maintain their dominant position by earning it. I think that's the important lesson.
By the way, there is your slide with some centralization issue. Could you comment on this?
Well, so this slide was a critique of central bank digital currencies, so-called central bank retail deposits, and just making the point that if all the retail deposits are in the central bank, then all the loan decisions are in the central bank, and that's not something I think we want. Central banks currently invest in treasury bills and mortgage-backed securities in the US, more broadly in some other countries. But we don't want those kind of allocation decisions being made privately. We want business loans being funded through the intermediation system in a decentralized, competitive way, so that if you want to start a business, you don't go to this, or you want a loan to finance your business that's already up and running, you don't go to the central bank with your hat in your hand, and if they turn you down, that's it. You want to be able to shop around among different retail banks. So any central bank retail deposit system that doesn't preserve that kind of competition in intermediation is very dangerous.
Okay, maybe I'll take
Alex.
Yeah, let me first, before I say what I want to say, I just want to react to your last. First of all, I agree with everything that you said, except for the last point. That is, the fact that there is a central bank digital currency doesn't mean that all the other businesses, including in particular credit allocation, is going to be taken over by the central bank. That is, all those activities are going to remain within the private banking system. And the private banking system, as was pointed out by Professor Nouriel Roubini, my longtime friend, and et cetera, et cetera. I do not want to add to that. I saw him grow up. So really, it's like a child to me. it's all those other activities, except the one of just providing the means of exchange, are going to remain within private institutions.
Good.
Like and in a narrow banking system, which may not be attainable politically speaking immediately, but maybe in 10, 20, 30 years, God knows when, nobody knows, may be attainable at some point, which is the most efficient one. Then there is going to be a complete separation between the business of providing a stable means of payment in terms of a purchasing basket that people care about, not in terms of gold or silver or diamonds or all sorts of gimmicks of this type that were good at the time, in the 19th century, in the 18th century, because all the sophistication of the financial network that we have today did not exist, and people didn't know about it. But so they used gold because it was rare and things like that. Because this is what nature sort of provided naturally as a safeguard, because it was rare, because it was very hard to actually dig the gold and things like that. So it was a natural limit. Now instead, I see now this limit is imposed today by the miners of Bitcoin by issuing at one stroke at the beginning, a fixed amount and letting it know, if you believe that, this amount is going to be fixed forever. Who knows? Is it going to be fixed forever? Who knows whether it's going to be fixed forever? That is, no government is going to last forever. Is there any private entity that is going to last forever? Now, I think, we heard a lot of arguments here about, why, central banks are, could be manipulated. It's true, they could be manipulated politically. And there is pressure, political pressure on central banks. It's also true, there is political pressure, but there are also checks and balances. What are the checks and balances on those 150 miners of Bitcoin that hold, according to some statistics, about something like between 30 and 50% of the total supply of Bitcoins in the world? Who knows who they are? Who knows who they are? We don't even know their identities. They are not elected. They are not under any kind of supervision. So there are risks there. And I'm told by one of the guys here who comes from the technical side that both the blockchain can also be hacked. Can be hacked. It may, it may be difficult, but not impossible. There's a small probability that it is happened. So there are risks here, there are risks there. I think it's very dangerous. And you said it yourself. The truth. On the one hand, you have those, enthusiasts of this new technology or something like that, that think that it's going to solve all the problems of the world. This is nonsense. On the other hand, you have all those that say that that this is really just a rotten pear or something like that. This is also exaggerated to a large extent. The truth is in between. So this brings me to really to the main point that I want to make. And that is from a welfare point of view, and I think as an economist, I think about the welfare of the entire society or something like that. Is there room both for supply of, first of all, let me grant one thing. I think that the big comparative advantage of the blockchain technology and all those fintech and things like that is not so much in the area of supplying an alternative to fiat money, whether it is in the form of paper or in the form of digital currencies. I think it is in the form of actually providing easier access to banking services in countries in which most of the population doesn't have easy access to credit, like China, like Africa, and things like that. This is a tremendous revolution for those countries. And we who come from the developed world, we don't appreciate that. But this is really for them a major kind of thing. And this is going to have, I think, very important repercussions in the world. So this is one thing to note that is very important. But also, you know, it is also going to make the business of transacting in all sorts of financial assets, risky assets and so on, much more efficient, and also the costs are going to come down. So I think this is another thing. But in terms of you know, providing a safe means of payment that has those three characteristics, you know, stable and numerical and universally acceptable and things like that, you know, it seems that central bank money, and I agree with that with Nouriel, really dominates everything else. And my advice to those people that deal with those things, which is most of the audience over here, is, you know, put your energy mostly in this direction rather than in the direction of replacing you know, the means of payment, because this is not where your comparative advantage is. You know, the comparative advantage is in all those other types of things. So this is, you know, one point that has to do with the separation. Number two has to do also with remember that the technology, you know, there are risks in the technology. You know, something being completely anonymous may have some advantages, but as Nouriel has said, you know, no government is going to tolerate complete anonymity for good reason, because, you know, this is going to basically the first that are going to use that and are already using that are basically, you know, the underground economy and things like that. And we see that the tendency in the world is towards having tighter, you know, tighter restrictions on abiding with tax laws, and there is much more exchange of information, even between banks. You know, banks are coerced to, existing banks are coerced to actually transmit information and so on. And I think to a large extent this is a justified, you know, sort of a justified trend. Now, this brings me to the question of what are the desirable limits between the activity of, you know, of a central bank in issuing a digital currency, and between, you know, the private, you know, private digital currency providing some sort of means of payment. I think that, you know, they from a welfare point of view, they could coexist one with the other, and there are various ways which one can conceive of, many of which have been discussed by Nouriel. Now, what are the main advantages of a private digital currency? They are, you know, they are very cost-effective, particularly as far as forest productions are concerned. But you know, but this kind of thing can also really be received through a central bank digital currency. So again, the central bank digital currency here dominates. I think there is a benefit to a welfare benefit, general welfare benefit of the activities of blockchain-based or some other system-based private companies is the competition to banks. You know, banks today are basically taking huge commissions, particularly as far as converting money from one currency to another currency. Commissions of 1%, 2% or something like that. And I think many of those companies that provide means of payment that is not necessarily linked to a particular currency, but can be redeemed very fast at low cost or something like that, is going to bypass a lot of those, which I think are to a large extent monopoly rents of the banking system. Many of those banks are really reaping, you know, monopoly rents, and I think this is, you know, this is an advantage. And okay, so basically, and then I mentioned already, you know, I think this was the most important thing, the access that, you know, in those countries, in the, you know, in China and in Africa and in many other countries where there is a large fraction of people that never had a bank account and who were excluded basically from the financial markets, they finally have an access to the financial markets, and not only to the financial markets, they were excluded from credit. Think of people in India. People in India, you know, the very poor people who have a small business, very, very minute business to make, you know, who have hardly any money to buy the goods that they have to sell during the day. They cannot get credit. Today, with these new kinds of money, private money, they have access to some very low, but for them, very meaningful amount of credit. And this, I think, is an achievement of those private money. So I think, you know, there is room for both. You know, there is room, and particularly, you know, in countries that are developed, like the United States, Europe, very sophisticated financial markets, and so on. I agree completely with what Nouriel was saying. I have nothing to add. But in those other countries, you know, those, you know, the development of those private monies that are based on digital technologies is really a big benefit for those populations. Now, whether ultimately they are going to become central bank or something like that remains to be seen. Maybe they will. Maybe it's a good idea. Maybe not. We'll see what happens. I mean, you know, in the future. Well, I have another completely different segment of things to say, but maybe I'll leave it for later if there is time. So I'll stop here.
Thanks, Alex. Hi, Tim.
Hi. Hey. Thanks for having me.
Thanks. Sound is good. So we are discussing viability of decentralized financial system, who will benefit, who will lose, and how it shall be managed, especially how supply should be measured. What are your thoughts on this?
Well, I think everybody benefits. Having an economy that is much more frictionless, much more global, much more open. The decentralized technology is going to be very fundamental to this. I think we've got an opportunity now to make a great leap where humanity can make this great leap forward. And starting with Bitcoin and the associated technologies, they have now made it so that we have a global currency. I mean, we've got great communications across borders, but now we've got a global currency, and it's the beginning of us thinking about the globe as one world. I think we've always thought in terms of tribalism or fiefdoms or geographic borders. And suddenly there's this new opportunity to, at least starting with a currency, with Bitcoin, have a currency that is global and open and not tied to any geographic territory. And then the other kind of great thing about it is, think of all the friction that happens when you do any kind of business cross-border. There are customs, there are currency transfer payments, there are the banks take something. Friction in commerce creates less friction in commerce creates more wealth for a society, and more liquidity creates more wealth for a society. And we have one of the great opportunities in the history of the world to create a much more frictionless currency and a much better way of doing business. And that opens up the world in a lot of different ways. And when you talk about winners and losers, I think that temporarily people are going to have to adapt and change, just as they are. I mean, I think one way of looking at it is like, hey, AI is going to take everybody's job, all of our jobs, every single thing that we do that is mundane and we do it over and over again. Artificial intelligence is going to take that job. And if that's the case, we're going to be in a world where we have to start to think a little more creatively, a little bit more openly. But the good news is that those mundane jobs are going to be done by robots and computers, and we're not going to really need to do them, but they will still get done. And so that allows us the freedom to think and create and drive progress forward. So this is really this is our great opportunity. And those governments or banks or whatever that are resisting this major change are putting speed bumps in the way of progress and a major transformation of humanity. So looking at it as winners and losers, we all win with better technology.
That's something Nouriel Roubini just presented, that central banks can manage millions of accounts directly without private banks because of artificial intelligence. And there is no need in blockchain. So customers can open accounts in central banks and transmit money within the central bank, so there is no this problem of layers. What do you think about this?
So I think the world moves away from centralized banks. I think the world moves toward decentralized currencies. There are going to be so these centralized banks and the. I mean, I think you're still thinking in terms of fiefdoms and tribalism and geographic borders, where we now have the ability to transcend those borders and to create a world that is much more open and dynamic and free of that, free of the friction that's created by individual countries, each having different regulations. I actually think those countries are going to have to compete for you and me. They're going to have to compete for all the great entrepreneurs of the world. They're going to have to compete for all the great, all the capital of the world. They're going to have to compete for all the great minds of the world. And in order to compete, they need to start thinking in terms of how do I serve my people rather than how do I control and regulate my people. You know, Binance started in China and it got to be a $10 billion business. And China said, we're restricting Bitcoin, we're regulating Bitcoin, we're creating a situation that's very difficult for anybody to trade Bitcoin. And so Binance just moved. They just moved to Singapore, and then Singapore started to get a little heavy-handed, and they moved to Malta. I get the feeling that these governments are not necessarily, they think that they're still sort of controlling a geographic area, or some of them do. Some are recognizing that this is a major opportunity and they're opening their minds. Japan, for instance, said Bitcoin is a national currency and here's how you do an ICO. And they're attracting all the great entrepreneurs because they know that this is an opportunity. And they're thinking, hey, 40 years from now, we think this is bigger than the internet. 40 years from now, the big winners, the big economic winners of the world are going to be the ones that open up and start thinking of the world as, you know, one globe and think about this. The Estonian government came up with this idea of the e-governance, and it's this: you can become. I'm a virtual resident of Estonia. The Prime Minister of Estonia came to Draper University and said, "Here, you're the third virtual resident of Estonia." He was in the Silicon Valley when he gave me that. I didn't have to go to Estonia to get my virtual residency. So he realized that people are mobile and that geographic borders are not as important as they were when we had limited resources and we all had to fight against each other for those limited resources. Now he's thinking, hey, I'm going to compete across border to provide the best government services available in the world. So he's looking at government the way a business looks at their customer and saying, hey, what can we provide to these people? And a business is not limited by geographic borders. A business can permeate all the borders. I can use Uber almost anywhere. I can Skype to you almost anywhere. And so governments have been very slow to recognize that this is an open world, and most of government services can be provided virtually. Even security, with all the cameras around, government services can be provided virtually. So you can get your medical insurance. That could easily be provided by somebody outside of your borders. Your pension or your Social Security could easily be provided by somebody outside of your borders. And I believe that there are going to be governments that are created that don't actually even have a land mass, but they're going to be able to provide things like very low-cost healthcare and new forms of insurance. And this is one of those times that, and I know there's some great economists on the panel here. This is one of those times where the economy can take a step function up, and the global economy, I believe, can grow at an unprecedented rate, as long as, and at least it will grow at that unprecedented rate in the regions where governments are recognizing that they have to perform to attract people.
Thank you. Any comments? Who want to add? Yes, please.
Can I make some observations? Because I think there's a lot of confusion and misunderstanding. First of all, everybody is in favor of competition in the provision of financial services. And the only point I made was there are some benefits if you have a central bank digital currency of having one piece, a very small piece, 1% of the financial services having a common numeraire, unit of account, means of payment, stable store of value and purchasing power over goods and services. Is already now we have fiat currencies, and now you're going to make it digital. Everything else can be private and it'll be remaining private and competitive, and actually that's going to avoid, if you have narrow banking, many of our problems that we exist today of a fractional reverse banking system. So nobody disagrees with private competition. So you have just one piece, payment system might have some economies of scale of having it, and you don't need 100,000 workers. You may need 1,000 of them in the central bank or less. With AI, maybe nobody. So it's going to be much more efficient than the current one. Secondly, I think there is a lot of nonsense about these things about decentralization from blockchain or crypto. First observation, Vitalik Buterin, who created Ethereum, says there is an inconsistent trinity. You cannot have at the same time scalability, decentralization, and security. That's a fundamental theorem. Bitcoin might be decentralized, but is not scalable, 5 transactions per second. And every solution so far that has been discussed that provides scalability leads to massive concentration. When you're going to move from proof of work to proof of stake, actually, you'll have massive concentration. So that's a fundamental problem. So I think there is a lot of delusion in talking about decentralization. It's not going to occur. Secondly, there's a lot of talk about decentralization, but in crypto, there is no decentralization. The miners are all centralized. Half a dozen of them control already all of the mining of Bitcoin, Ether, and anything else. And by the way, most of them are in countries like China, Belarus, Russia, that are becoming national security problems for the White House. Serious issues about that. So there's massive concentration. And once you're moving to proof of stake, actually, it's going to be much worse, because the more you have stake, the more you have oligopoly and concentration and monopoly. So you have massive concentration, massive centralization of mining. You have massive centralization of all the exchanges. 99% of all transactions in crypto occur in centralized exchanges. They've tried hundreds of these decentralized exchanges. They're all going bust, completely going bust. None of them is going to ever survive in any form, and I'm not going to go into the technical detail. You have massive centralization of wealth. The concentration of inequality in crypto is worse than North Korea. North Korea has a Gini coefficient of 0.84. In Bitcoin is 0.86, okay? So worse than North Korea, okay? So I speak about decentralization. And you have massive centralization also of developers. Developers are police, prosecutor, and judge, right? When something goes wrong with the contracts, they change the code. Code is not law. And the smart contracts are neither contracts nor are smart. They're full of bugs, and they're going to stay like this. So talking about decentralization is just total bullshit. Centralization of mining, centralization of exchanges, centralization of wealth, centralization of development. Vitalik Buterin is benevolent dictator for life of Ether, okay? Benevolent dictator. So it's the same thing. When you want to change the code, you change it. Come on, let's not joke. You're police, prosecutor, judge, and everything, okay? So it's nonsense. It's total nonsense. It's fully centralized system, and the inconsistent trinity says you cannot have a system is scalable that is decentralized. It's not going to happen, and it's impossible. And on blockchain, the reality is that people have realized there is no government, no private company, no bank, no charity, no nonprofit is going to put on a public, distributed, permissionless, trustless ledger all their P&L, all the balance sheet, all the transactions, everything with customers, suppliers, and you name it. And by the way, officially it's private, but if Alcoa buys, 4 times aluminum, it doesn't take a genius to know that behind it's Alcoa, even if it's unquote private. So everything is private becomes public, even if you don't know who's behind that public key or private key, and you name it, okay? So it's all going to be public. And the reality is that then everybody has realized that, and all these things about DLT, corporate DLT, or blockchain and so on, have nothing to do with blockchain. Nothing. They are all private. There is nothing is public. They are all permissioned. There is nothing that is permissionless. They're all having somebody with a trusted authority that decides which transaction is right and which one is not. It's not based on a trustless authentication system. There is proof of work, proof of stake, or whatever. They're all centralized. They're not distributed. There is no reason to have all your P&L, all your balance sheet on 100,000 computers, 1 million computers. It's a waste of energy. It's a waste of computing space. Why would anybody want to do it? So it's fully centralized. So what's blockchain about it? There is nothing about it is blockchain. It's just a gimmick, it's a label. These are not blockchain. They are essentially centralized databases. They are glorified spreadsheets. So stop calling them blockchain. They have nothing to do with blockchain, okay? So let's not kid each other. This is not blockchain, and nobody's going to do it. And by the way, people talk about how well you can do for social things, for the poor people, for social development, for whatever in poor countries and so on. As I pointed out, there are billions of people in Africa, in China, in India, who can make payment transactions and soon enough lending micropayments using systems like Alipay, WeChat Pay, PMI system, UPI system, and M-Pesa that are used by billions of people. You can do billions of transactions, have nothing to do with blockchain. So you want to bank the unbanked, it's already done in China, it's already done in India, it's already done everywhere in Africa. Why do you need crypto? Why do you need blockchain? It's already done. The systems are digital, they work perfectly fine. They are almost costless, okay?
That's what we will discuss in the next panel.
Let's not
in few minutes.
Bullshit about stuff, okay?
So I feel like Tim has something to...
Final point, it was a study of 43 blockchain experiments in this kind of stuff of social development, Africa, poor countries, unbanked. Of these 43 case study, how many of them are working successful? Zero. Okay? 43 examples of trying to apply to what you applied. Not a single one of them is working, because it's never going to work.
We have 2 minutes before the next panel. Tim, your turn.
So I heard the same kind of pessimism and Ludditism from people when we saw the internet come. Why do we need this internet thing? Why do we need this ridiculous technology? Why nobody wants to put their credit card on the internet?
10 years into the internet, 1 billion people were using it. Okay, after 10 years,
now it seems
20 million accounts. Okay, let's not make that comparison. It's embarrassing.
It's not scalable. With the Lightning Network, it is scalable. All these technologies are starting to happen. You're just saying, well, what is it now? Why do we want a currency that's tied to a political force when we can have one that is open and transparent and, yes, decentralized? It's true that Ethereum is centralized. It is not true that Bitcoin is centralized. Bitcoin is decentralized, open, it's competitive. You can create your own mining system. You can use, and the mining is going to move along Moore's law. It's going to commoditize, and anybody can come in with a faster, cheaper computer and go and compete with whoever's doing all the mining. I think you're spreading fear. I think you're doing a horrible service for humanity. And I think you really need to start thinking optimistically of what this could do for society. Not let's just sit in the past and live the way we've always lived. You've got to start thinking, hey, the world's going to be awesome. Let's make it awesome. And it can be with all these great entrepreneurs that are pursuing these great projects that are going to make it so that we are all much, much better off. And society, you think, oh, yeah, everything's fine. I don't think it's all fine. I think there are a lot of great things that can happen because technology moves it forward. And you know, the attitude of just leaving it all, oh, this is horrible. Why do we want this?
There are some
I mean, that slows down
progress.
You don't need that.
You can always, if you're against blockchain, your technology is dinosaur. It's nonsense.
But
9 out of
I'm going to
technologies
be
fail,
proven right
period,
in the next
okay?
10 years.
Just, you know,
Sorry, can I?
I mean, what a concept.
Sorry. So
nonsense.
let me vote a bit. So it's time for the next panel about the impact for emerging countries.
No,
And Sergei
sorry.
Guriev is very strict. He was my thesis supervisor. So I'm not in an easy situation.
Can I
It's
just
very...
make one comment? Just in terms of scalability, there's just 2 points. One, Ripple actually basically uses distributed ledger, and as you know, they're now processing at this stage significant volumes of transactions. And what's significant about Ripple is that basically the comparing to SWIFT as a method of transfer, where it was 3 days, you can now do a transfer in 1 minute. And secondly, the cost of that is less than 10 cents compared to $10 to $17 for a transaction with traditional using SWIFT. So there's an example where, and it's a permission blockchain system. It's correct. So, but that's a practical, and that's most major banks are now using, more and more using Ripple. The second thing is in clearing and settlement, the DTTC, as you may know, basically recently tested clearing US equities within the day, and they successfully did 25,000 transactions a second. Now, in the US equity market, now they basically need to do about 100,000 transactions a second to actually replace it. But the key point I'm making is that it was basically scalable, and the Australian Stock Exchange similarly are testing, and they're targeting similar volumes around at the moment. Their testing is about, I think, 25,000 as well. So it is a journey, and I think with permissioned distributed ledgers, I think there is a big future, and it is about saving money, and it's fast. So just to put it in perspective, yeah.
Thanks a lot. I encourage you
Bitcoin, I mean, the Lightning Network is going to be faster than the Visa network. So, these things are, the Lightning Network just goes on Bitcoin, and it's going to be faster than the Visa network. So we really, all of these problems are being solved by entrepreneurs, and it's 5-10 years from now, we're gonna all be using crypto, even you.